wishing to learn. And in a sense, Praveen Sinha has already told us everything that there is to be said. And we have three other panelists also who are far more knowledgeable than me to speak on the topic. Hence, what I'm supposed to do is to be the lead speaker. Lead speaker simply means it's like a flower vase, ornamental. The specialist speakers will talk about the details. And please note, this also means that the lead speaker does not answer any of the questions. The questions should all be addressed to the other speakers. Scams. The scams have been around for a very, very long time. We are particularly talking about financial sector scams in this. But generally, scams have been around for a very long time. In independent India, the earliest one was in the mid-50s. In recent years, scams have increased in importance. In absolute terms, particularly in the financial sector. And therefore, there is a rhetorical question that one should pose. It's a rhetorical question, so I'm not very sure what the answer is. Does liberalization, in whatever form, however defined, encourage the scope for scams? Not per se, but does it encourage the scope for scams because regulation cannot keep pace? The scamster is always one step ahead. One example of that, not mentioned by Mr. Sinha because it's sort of tangentially related, is fraud in the case of GST. That does not mean that GST is a bad thing. It's a good thing. But because GST is there, there are newer and more novel forms of fraud. The trouble, of course, what is a Ponzi scheme? And Mr. Sinha gave us an example, which is a pyramidal structure. Economists often talk about ex ante and ex post. Ex ante is when I know something in advance. Ex post is what I know after the fact. Do I know in advance what is a Ponzi scheme? Do I know in advance what is a scam? The subtitle of this is preventive vigilance. Prevention is about knowing it in advance. It is very easy to be wise after the fact. In advance, do I know that there is an asset bubble? Should the growth in the financial sector bear some proportion to the growth in the real sector? And if the growth in the financial sector is uncomfortably high and is not proportionate to the growth in the real sector, regardless of whether I can prove that there is an asset bubble or not, which I will only know post facto, should one be concerned? Today we know NPAs, both the stock and the flow, have been controlled. But again, the rhetorical question is, what happens when growth recovers? What happens when credit growth recovers? will I be able to know in advance? And I stress this particularly because no matter what CBI does, no matter what legislation does, no matter what enforcement does, there can be no cure for human greed. No government can legislate against human greed. Mr. Sinha said that the poor suffer. Well, of some types. But several years ago, it was not only the poor may suffer from chit funds, but it was not only the poor who invested heavily at one point in time in plantation companies. It is not only the poor, what should one call it? Should it call it the Jamtara scam or the Nigeria scam, or now that it has moved to Kolkata, should it call it the Kolkata scam? It is not only the poor who suffer from that. So if someone is promising me an annual rate of return of 30%, and despite all the warnings by RBI and others, if I click on that email, if I respond to that SMS, if I part with that OTP, what CBI will be ever able to protect me? Scams change. Let me give an old example, which you will not relate to, so I have deliberately. Mr. Sinha, how many cases did you give us? Case 7, I think. So look upon this as case number 8, which CBI did not investigate. I don't know how many of you are familiar with the Northeast. I'm particularly talking about Guwahati many, many years ago. Many, many years ago, the gauge conversion had not happened. There was no bridge over the Brahmaputra River. So on one side, there was broad gauge. On the other side, there was meter gauge. And passengers had to take a ferry to cross over from one side to the other side. And because passengers bought a through ticket, the ferry was contracted out to a private contractor by the railways. And my fare for the ferry was part of the through ticket. So the railways desired to invite a bid. And before inviting the bid, the railways investigated and found that there were 3 kinds of traffic on passenger trains between these 2 points. On one side, the station was Pandu, and on the other side, the station was Amengao. And the railways saw that there were 3 kinds of traffic flow between these 3. Passengers, goods carried in goods vans, and livestock. A lot of passengers, a lot of freight, almost no livestock. So they invited bids. And along came a private party who quoted about 1/20th of the price for passengers, about 1/20th of the price for freight, and 40 times the cost for livestock. The railways said, stupid fellow, it's his problem. How is it our concern? There is no livestock flow here. Fellow doesn't realize, so they gave him the contract. This chap bought 100 monkeys. And he kept ferrying them back and forth between Pandu and Amengao. And so that people couldn't catch him, he didn't make them board exactly in Pandu or deboard exactly in Amengao, some distance away. When this was finally discovered, there was nothing the railways could do because it was completely legal. until the contract came up for renewal. The point I'm making is, again, I reiterate what I said. What is the role of the law? And there is a difference in the way an economist typically looks at the law and the way the legal system, lawyers and judiciary look at the law. And it's an important point, therefore I want to stress it. The legal system, lawyers and judiciary typically look at law from the point of view of compensation. You have done a wrong, so you need to compensate me or society if it is a criminal case. Economists generally tend to look at it from the preventive point of view, from the dynamic point of view, from the deterrent point of view. So it is not a question of you compensating for the damage you have caused, but it's a question of ensuring that no one with a mala fide intent does something like this in the future. Which means punitive penalties. And I want to stress this because the notion of punitive is pretty common in the US system. In the Indian system of jurisprudence, it is relatively rare. Everything that we are going to talk about today and are talking about today is embedded in the criminal justice system. Yes, there are civil cases also, but in terms of that overall backlog, 2/3 of cases are criminal cases in the overall backlog. If the overall criminal justice system is not credible, then how on earth is CBI alone going to become credible? So yes, indeed, Mr. Sinha, we need to talk about the IPC. We need to talk about the Indian Evidence Act. We need to talk about the Criminal Procedure Code. By and large, it is the case, so far as criminal justice in India is concerned, that by and large it is the case that the probability of prosecution is pretty low. The probability of conviction when prosecuted is also low. And if you multiply the conditional probabilities, the probability of getting away with a crime is fairly high. So in general, crime is a low-risk business. I should quickly say conviction rates. Conviction rates depend on whether you're calculating them from the point when a charge sheet has been filed or from the point when an FIR has been filed. Perhaps rightly it should be calculated from the point when a charge sheet has been filed. And if you do that, CBI's conviction rate is what, about 65%, around that, a little bit more perhaps? 75%. It's already 75%? Well, far higher than IPC crimes. I thought 75% was a target, but 75% already. Congratulations. Now we come to bank frauds. In bank frauds, there are all kinds of different parties. And we should also recognize corporate misgovernance, the role of independent directors, the role of rating agencies, the role of auditors. Now, this is not something that is typical to India. If you look at what has happened in the US, you find a mirror image of this. So the broader question is culpability of all of these, and typically regulation by government in whatever form, legislation by government in whatever form, steps in when the self-regulation does not occur. People will perpetually complain of harassment by the government, including by the CBI. By the way, harassment is embedded, whether we like it or not, in the justice system. The moment there is an FIR against me, not just by CBI, I will have to undergo some kind of harassment. It's almost definitional. If I am not guilty, I will eventually be freed. But some harassment, whether it is by the tax authorities, whether it is by the criminal justice system, whether it is by the CBI, is almost inevitable. The last couple of points, I already mentioned one of them earlier. Today, the twin balance sheet problem looks good. CBI's conviction rate is up to 65%. But three rhetorical questions again. One, is it looking good because growth is dampened today? Is it looking good because the financial sector growth is dampened today? Is it looking good because the credit growth is somewhat dampened today? What happens when they begin to increase? Is the entire system capable of handling that? To handle the newer and newer kind of frauds? Secondly, because of what has happened, because of the legacy, is there an inbuilt element of risk aversion in the system today, compounded by some sections of the Prevention of Corruption Act? If there is some amount of risk aversion now embedded in the system, and banks are reluctant to lend, that is not very desirable either. What we want the entire system to do is to punish the mala fide, but also protect the bona fide. So while we will focus on the mala fide here, let us not forget the bona fide, because the objective of all regulation is to ensure both the punishment of the mala fide, but also the protection of the bona fide. Thank you very much.
Thank you, sir. Our next speaker is Ms. Madhavi Puri Buch, Chairperson SEBI. Ms. Buch assumed office as Chairperson of Securities and Exchange Board of India with effect from March 2, 2022. Ms. Buch has served as whole-time member, SEBI, from April 2017 till October 2021, during which she handled various departments in SEBI. Prior to that, she had a career in financial markets and banking of around 3 decades. She served as consultant to the New Development Bank in Shanghai, head of Singapore office of the private equity firm Greater Pacific Capital, managing director and chief executive officer at ICICI Securities Limited, and executive director on the board of ICICI Bank. Ms. Buch also served as a non-executive director on the boards of various companies. Ms. Buch holds an MBA from Indian Institute of Management, Ahmedabad, and is a graduate in mathematics from St. Stephen's College, New Delhi. May I now request Ms. Madhavi Puri Buch to kindly address the session.
You have to slide forward. It is that side? Okay. No, I'll take it. Is the slide forward there? Thank you. Yeah. Excellent. Thank you. I'm told I should be that side because it's closer. Okay. Respected co-panelists, Director CBI, ladies and gentlemen, I must say it's an honor to be here today for the simple reason that the collective amount of experience in terms of investigative years that is sitting here today is so impressive that I'm actually feeling a little inadequate in attempting to make a presentation today. I'm also taking the liberty to deviate a little bit from the strict interpretation of the topic today because it's been too long, over a decade that I was a banker, so I must admit that I'm a bit dated on that. And ever since the Buds Act came, SEBI's role in Ponzi schemes has also come down very significantly. So what is new and current in our space is really the securities market fraud, or what is loosely called stock exchange fraud. But as I was listening to the other panelists, it was clear to me that the basic character, nature, and characteristics of fraud do not change. They are pretty similar across various domains, and to be able to decode them and understand them and the kind of challenges we all face are pretty similar. So the focus really of my presentation, while it's going to be in the area of securities fraud, so things like price manipulation of stock prices, things like insider trading, things like front running, these are all the kinds of fraud that we face in our markets. The contours are very similar to what we see in other types of fraud. And the very first characteristic is that people are now very smart. They do not do fraud in their own name. There was a time when people used to do it because there was lack of transparency in the system and in the exchanges. Even today, you'll be surprised, globally, a lot of trading happens in what is known as omnibus accounts. Whereas in India, we do not permit that. So we actually know to the last beneficial owner in the domestic market as to whose account it is and who is actually trading. And many of the regulators globally, including in developed economies like the US, they are actually quite surprised at the level of sophistication that we have in our markets in terms of technology to be able to actually identify fraud. But the key aspect, as we were looking at earlier, was that people hide their fraud behind other names. Right? So whether it is entities sitting in Dubai or whether it is indeed domestically, the crime is being committed in the name of an entity which is totally unrelated to the mastermind. In the past, it used to be that people were a bit naive, and stock market fraud used to be perpetrated in the name of the brother or the father or the sister or the children. Then it became mother-in-law, father-in-law, then it became behnois. So a lot of this used to be within the family. In today's environment, that is long gone. These frauds are now carried out in the names of entities which are untraceable and unconnected to the mastermind. And the reason that has emerged is that when you perpetrate a fraud, profit is pretty much guaranteed. When that guarantee of profit is there, there are a large number of people who are willing to deploy their money into the market, their own money in their own account, because profit is guaranteed. So no longer does a person say, oh, you want to use my account for some wrongdoing, well, you need to send the money to me. No, it's now, oh, you want to do some wrongdoing in my account, I'm very happy to even fund it, obviously for a commission. Very often, that commission also is not required because people are actually turning black to white. So a large businessman with a lot of black money, he is essentially saying, okay, if there is someone doing insider trading or front running where profits are guaranteed, I will put my own 100 crores into the market, I will make a profit of 10 crores, that will be white money, and my black money, which is sitting 10 crores, I will send via Hawala to Dubai to the mastermind of the whole scheme. So now you can see that there is no way that we can actually find a connection between the person who is the mastermind and the person in whose name the fraud is actually happening. And as you know, one of the fundamental requirements of establishing fraud is connection, right? You need to show that there is a conspiracy. You need to show that there is a meeting of minds, which in the current environment has become impossible. So this is one of the biggest challenges we face in the market. The second challenge, of course, and I don't need to belabor that point amongst all of us here, is the maze of transactions and the maze of networks that are prevalent and existing. Now, we deal largely with listed companies in SEBI, but each of these listed companies have associate companies which are private limited companies, so they do not come under our purview. And this set of connections is in the hundreds. It's not ek to company ho gayi, 6-7 company ho gayi. These are in the hundreds and it proliferates. And again, the challenge we face is that the disclosures that we demand of listed companies are not something that apply to the private entities. So there is this whole regulatory arbitrage that if some listed company wants to perpetrate a fraud, it's not that difficult. You just do it through one of your private associates. So again, going back to some of the cases that you illustrated, and those private enterprises can be either within the country or overseas, sitting in Dubai. So this maze and this linkage and the vast proliferation of entities is another big challenge. Now, in today's environment, we all find that technology and supervisory technology, as we call it, SupTech, is one of the most powerful tools that we have in order to still be able to find those associations which are attempted to be hidden, and in order to unmask those masterminds who are wanting to remain hidden. What we have learned in SEBI over the last 3 or 4 years is that through a process of very significant technology upgradation, we now actually have very good capability to identify the wrongdoing. So by analyzing the data which we already have in our exchanges and in the social media, etc., we put it all together, and it is possible for us to understand and identify that here is a person who is making disproportionate profits quarter after quarter by taking a large bet on a particular company. Now, this cannot be a matter of coincidence, right? So to us, it's apparent that this is a case of insider trading. Where the challenge comes is, as I said, that the law and the legal provisions of our own, so we have no one to blame other than ourselves, have not kept pace with the technology. So in order to translate what the technology is now giving us, which is a clear case, let us say in this case of insider trading, the law lets us down. The extant law is rooted in a very old environment where it is incumbent on the regulator to identify who was the insider, who gave that information, when they gave it, the medium of giving that information, and what is the relationship between the insider and this person who's making the profit. Now, all of you being of an investigative mindset and profession, you would know that in today's environment, that's impossible, right? So we have this very unhappy situation where we know that there is wrongdoing, we know in whose account it is happening, but we are unable to take it to the conviction stage. The need to change our regulation and to recognize the fact that this is the new modus operandi by which fraud is being perpetrated is really the challenge before us. And we hope that in the coming years, 1 or 2 years, we will overcome some of the huge resistance and public pressure against instituting such regulations. We will be able to overcome it in order to actually bring the regulation up to date with both what the fraudsters are doing and what our own technology is actually able to deliver. So this frustration which we feel today, I'm sure many of you face a similar frustration, You know, आपकी आंखों के सामने crime commit हो रहा है, आप देख पा रहे हैं, लेकिन आप उसको convict नहीं कर पा रहे हैं, is the frustration that all of us feel. And as I was listening, to Mr. Sinha, I was thinking the next time I feel like this, I should come meet one of you. Because I will have a shoulder to cry on who will actually understand. Because there are very few people who understand this frustration of not being able to actually take the next step, which is so apparent to us when a crime is being committed. Changing subject a little bit and going away from things like front running and insider trading, going on to things which are related to corporate fraud. I thought I would share with you that, very often when people think of a listed company and that there is a fraud in that listed company, the automatic thought is SEBI, right? But it's actually interesting to note, and the analogy that I like to give is that SEBI is not to a listed company what, let's say, an RBI is to a bank. It is not. A bank is the child of RBI. There is a huge amount of supervision, guidance, prudential norms, regular inspection, regular reporting, which happens in the context of the business of the bank. The business of the bank. SEBI never, ever, ever, ever asks a listed company about the business of the company. We only ask for three things. One is we ask for disclosure. Please disclose X, Y, and Z because investors need to know it. And mind you, we don't even look inside the disclosure to ask, was the disclosure right or wrong? No. This is self-disclosure. The market will read it. The market will decide whether they want to buy the shares, not buy the shares. SEBI does not get into it. The second thing we ask for is certain processes. So when we say that you do related party transactions, it's okay. We cannot stop you. It's a free world. It's a free country. But if it's beyond a certain threshold, please go and take approval of your shareholders. So it's a process. If the shareholders approve, you do it. We never examine whether that transaction is right, wrong, good for the shareholder, bad for the shareholder. We never apply our mind because we're not required, nor is it a good idea for us to double guess what the company is doing from their business point of view. The third thing over which we have full jurisdiction is the trading in the shares of the company. So the parallel I like to give is this listed company is like a child. हमारे यहाँ मैथ्स की ट्यूशन हम लोग पढ़ाते हैं. ये सारे जो बच्चे हमारे यहाँ मैथ्स पढ़ने आते हैं, लेकिन हिस्ट्री, ज्योग्राफी, फिजिक्स हमारे ना तो सब्जेक्ट हैं, ना ही वो हमारे पास आते हैं. Now, some of them may have sectoral regulators. Let's say banks may have an RBI, a telecom company may have a TRAI, somebody else may have a mutual fund may have SEBI. That's the responsibility of the sectoral regulator. If there is corporate fraud, siphoning of funds, MC and SFIO is the relevant authority. If there is accounting fraud, whether accounting standards have been followed or not is the subject of NAFRA, not of SEBI. If there is something which is related to customs evasion, that is not ours, that is revenue intelligence. So somewhere this belief that SEBI is responsible whole and sole for listed entities is factually and in law incorrect. Not just inaccurate, it is incorrect. We are the regulators of securities markets. We are not the regulators of listed companies. The next subject which I would like to touch upon, this is an onion. We all know when we try and peel an onion, khub rona aata hai. So this is really a sharing of how we think about when we do our investigations. So whenever our teams sit down and say, this is the problem, we know that in unpeeling the onion, it will be very tough, we will all have to cry, but we have the confidence that by the time we end the investigation, we will have left nothing in the middle. There will be nothing left to hide. But in doing this, we know that we will face the challenge when we build a case in courts of law. We will face the challenge of violation of letter of the law or spirit of the law. So very often we come across cases where it is abundantly clear that the spirit of the law has been violated. However, unfortunately, the way that our judicial system is, the way our regulations are, the letter of the law is what really gets penalized or otherwise, and have some very, very competent senior counsels, lawyers, who can stand up in a court and on technicalities, on strict interpretation of the letter of the law, actually say that there has been no violation. And I'll give one of the most, which I found to be the most amusing, because sometimes I feel we have to maintain our sense of humor, otherwise we'll go insane. So we actually had this case, and one of the functions of SEBI is that every company, listed company, has to furnish to the exchange every month a certificate which is saying that there are no overdues. Okay, so if I have to pay a bank, if I have to pay an NBFC, there are no overdues, right? So you have to give this monthly certificate. So it's in the nature of disclosure. As I said, we only ask for disclosure. We had the case of this very large company which did not furnish it, and when we said violation, the lawyer stood up in the tribunal and said, "My lord, SEBI has said I must furnish a no dues certificate. I had overdues, so I didn't furnish. And therefore, I am not in violation of SEBI's laws." Right? Now, what does this tell us? This tells us two things. Number one, SEBI better be very, very, very careful about how we draft our regulation. And you have to anticipate what somebody is going to stand up and say tomorrow, which is, what shall I say? The second thing is really that how do we, in terms of the way our entire mechanism, judicial system operates, what is that we need to do which can help us to move from simply looking at compliance with the letter of the law to compliance with the spirit of the law. Now that is something which is going to be very, very difficult to achieve. In many ways in the US, because everybody compares us with the US seems to have found the solution in terms of settlement. So everything is settled outside, and therefore a lot of this negotiation that happens between the regulator and the entity being so-called punished, letter of the law, spirit of the law, everything is bundled together in that settlement amount. Unfortunately, in our country, the word settlement is a dirty word. So if SEBI ever approves a settlement, mind you, we have a full set of regulations on settlement, but if SEBI ever settles, it's seen as a crime that SEBI has committed. Oh, isko to chhod diya. Okay? Now, again, that culture, particularly if we want to move from letter of the law to spirit of the law, that culture of settlement we will have to bring in, because that's the only observable form that we have seen in the world of how you can move from letter of the law to spirit of the law. Lastly, I would like to emphasize that, all of us, as said here, are investigators. And there was a time when these were the kind of footprints that needed to be investigated in any crime. Today it is a digital footprint. And therefore the ability to have powers to trace the digital footprint is absolutely essential to any investigation. Now the CBI doesn't have a challenge because you have these powers. SEBI, believe it or not, does not have these powers. Now imagine if you had to conduct an investigation without access to digital footprint today, how effective could your investigation be? Well, that's how frustrated we are today, because our hands are tied behind our back, because we are not permitted to have access to the digital footprint. So we are, of course, it will take time, these things take time, but we have petitioned and we intend to stay with that petition. But certainly in this forum of all investigators, you would appreciate our angst that if we don't get access to being able to identify digital footprint, it will be impossible going forward for us to conduct any form of investigation whatsoever. And I'm sure that the next session which is going to be held will only reinforce that fact. Same thing, so far, SEBI has been given, for instance, access to call data records. Almost all our cases are based on bank statements and call data records. As I said, what the world has moved to, the new modus operandi, there is no bank account trace, because these are independent third parties operating with independent source of funds, and communication, they have stopped using the phone. It's all about vanishing messages. It's all about encrypted phone calls. It's all about Telegram. It's all about WhatsApp. So again, unless that access to that information is available, going forward, the kind of cases that we have cracked in the recent past, some of you may have read them in the media, very significant cases of front-running, insider trading, etc., will be impossible for us to do. The whole world is moving towards this digital remote-controlled fraud. It's like remote-controlled warfare, right? The soldiers in future will not go to a front and fight. The whole thing will be done digitally, either with drones or through economic warfare. And that's where the world of fraud is also going. These are remote-controlled, largely digital frauds. So this is the future, and therefore it has huge implications for us as investigative agencies, that are we equipped and are we creating the capability within our institutions for people who are data analytics savvy, who are technology savvy, who are AI/ML savvy, and who are the people who we are recruiting, who are the people we are promoting. So that as the world becomes more and more digital and our investigation requires more and more digital savviness, we have the right people in place to actually lead the investigation for such frauds. After all of that depressing stuff, I just want to leave one point of optimism, that despite all these constraints, we soldier on, and we do find that people make mistakes, okay? They do leave traces behind. We do search and seizure operations, we do find evidence, we do build those cases, and most recently, the one thing which SEBI felt very happy about was when a major channel reported one of the cases which we had cracked, and they were reporting it in the media on television, and the last line that they said was, given the way that SEBI's technology is now working, लोगों को सतर्क रहना चाहिए कि SEBI की नज़र से छुपना मुश्किल ही नहीं, नामुमकिन है. Thank you.
Thank you, ma'am. Our next speaker is Shri Mahesh Kumar Jain, Deputy Governor, RBI. A seasoned banker with over 35 years experience, including 10 years at various board level positions, Shri Mahesh Kumar Jain is presently Deputy Governor, RBI, where he had supervision and responsible for financial stability of banks and non-banks. He also leads financial inclusion, consumer education and protection, and human resource management. Shri Jain represents the Reserve Bank in the Basel Committee on Banking Supervision and is Vice Chairman of the Advisory Board of the OECD International Network on Financial Education. Prior to the Reserve Bank, Shri Jain had an illustrious career in commercial banking, including heading two banks, IDBI Bank and Indian Bank. Shri Jain has also served Punjab National Bank and Syndicate Bank, where he handled various portfolios, including credit, operations, and risk management. Shri Jain holds postgraduate degree in commerce and has a MBA. Further, he is a fellow member of Indian Institute of Bankers, a certified financial risk manager, and a chartered financial analyst. May I now request Shri Jain to kindly address the session.
Distinguished panelists, ladies and gentlemen, thank you for inviting me. It's my privilege to come here on Chintan Shivir and to share my views as a practitioner as well as a regulator and supervisor. Mr. Sinha has already explained the trend, the modus operandi, so I won't touch upon those issues. Dr. Bibek has really give a different analogy and a different connect that how the economy is really important and what is the connect between the economy and the fraud. I am thankful to Ms. Madhavi to really giving a regulatory perspective. So she has really eased out my job. As Dr. Bibek told about it, the fraud, especially in financial service industry, is neither unique and nor it is recent phenomena. It is there for centuries and for long. And frauds are reported across the world, not only in India. And it is happening in publicly, privately owned entities, and even it is happening in not so for-profit organization. But the important point is that fraud can involve various variables. And the important variable is the intent. So the intent is the most crucial element in differentiating between the fraud and a mistake. And that is where being practitioners are available here, bankers and the investigators. So it's very important that we have to decide where the intent lies. The intent lies when someone is looking for gains through illegal or illegitimate means. Secondly, as Dr. Bibek also talked about it by giving the analogy of transporting the monkeys, there is a trade-off between the cost of crime and the benefit of crime. Criminals rationalize their behavior by weighing the probability and the consequences of being caught against the probability of success and the benefits. Therefore, opportunity to commit fraud, probability of punishment, and the severity of the punishment also becomes important variables. And that is where it's the right forum to really discuss and bring together the bankers as well as the investigators to understand all these issues. The opportunities to commit fraud in turn is linked to deficiencies in preventive measures such as weak internal controls, lack of oversight, etc. Now in the banking space, it's very important because it is having a direct impact on the financial stability of the country. And if the financial stability is affected, it is having a larger impact on the economic growth of the country. And that's why it's very important how the banking sector frauds are relevant. The trends have already been explained and Mr. Sinha has given that while the large value frauds, the low frequency and the high impact. When it is low frequency, high impact issues, it means the banks need to strengthen their risk management practices. The second in the digital space, where the large volume and the less value, means that there is high frequency and the low impact frauds. There the internal control matters a lot. So we have to basically focus on the internal controls. Modus operandi has already been explained, but I will touch upon the new digital paradigm which has changed the mechanics of committing frauds. Luring customers to part with sensitive details through phishing, wishing, and smishing. Card scheming, cloning are among the common modus operandi in case of digital fraud. Indeed, the tide of internet, social media, and mobile phones have made running Ponzi schemes relatively easier. Earlier it was difficult, now it's very easy. In the digital age, the fraudsters can easily raise money through anonymous means, as Ms. Madhavi explained, transfer funds or siphon of the money and move across jurisdiction with high level of opacity. The modern day Ponzi fraudster can reach a greater number of victims, that is basically the pyramid structure, with much less efforts and hide the money gathered through the fraudulent means, more so with additional options like crypto assets and related products. Now what we should do? So I'm having 3-4 points for the bankers to really focus upon. In my view, it is in the best interest of all the legitimate stakeholders to make sure that the probability of success of executing fraudulent transaction as well as the gains which could accrue due to such fraudulent transaction are as low as possible. by putting in appropriate preventive control measures. From a banker perspective, it is often too difficult to match up with the ingenuity of the fraudster. And that is where I am bringing the banker's perspective as well to the investigators. Unless there is some evidence of collusion, the bank and its staff are also victims of the fraud. However, the public entrusts their money with the banks as they provide intermediation between savers and borrowers. Therefore, if banks are unable to perform their role of delegated monitors effectively, it may result to transfer of wealth from their stakeholders to the fraudsters. So bankers should be very, very vigilant while monitoring, preventing, and taking the control of the frauds. Bankers also need to register, and that's also again very important that we have seen in the past whenever these frauds have detected and happened, and Dr. Bibek also talked about it, that whether it is because of the low credit growth while the numbers are low, or is it because of otherwise. So bankers also need to resist the temptation of letting business priorities and revenues overpower robust security controls and their internal controls. And that's very important. Quite often we have seen the aggressive growth, even globally also. Very recently, the Silicon Valley Bank fall down, what we have seen, it is mainly because of the very, very aggressive growth by sidelining their risk management practices and their governance systems. It needs to be appreciated that post-occurrence of the fraud, the potential cost, including the loss of reputation, can be much higher than putting in place preventive controls. Banks should endeavor to have a robust fraud management system that includes a comprehensive policy on fraud risk management, early warning systems, regular reviews, and root cause analysis to plug gaps and deficiency in the system. As new frauds are emerging on a real-time basis, use of artificial intelligence and machine learning technologies should be applied with the widest possible view of risk. Banks should also leverage the know your customer process to truly know their customers instead of merely treating as a compliance exercise. And that is what Mr. Sinha pointed out. Should there be a separation between the due diligence and the appraisal? And that is where the know your customer is very, very important, because that is the due diligence part. Quite often, the bankers are overlooking whenever we are detecting and identifying the causes of the frauds. In banking, very often the line between intent to commit fraud and genuine business decisions get blurred. And that is also for the investigators is important. Therefore, bankers should clearly document the rationale for their decisions. This would help investigating agencies understand the reasons, circumstances, and justification for their decisions. I would also request agencies not to just decision with hindsight. After the event, more information is available, which may make the decision appear incorrect. However, one needs to consider the information available, the prevailing circumstances at the decision point, and most importantly, the human element to arrive at a correct appreciation of the decision taken. There is one important point, another. The many decisions in banking, such as credit underwriting, requires a specialized skill in the credit, reading the financial statement, understanding the financial statement, and the risk management skills. Therefore, while investigating such decisions, there is a need for similar specialized skills and knowledge to truly appreciate, evaluate, and adjudicate such decisions. RBI has taken various initiatives to create the awareness. One more important point which talk about the customer's awareness, as Dr. Dibek asked about it, RBI has taken initiative through RBI Kehta Hai to create the awareness. The customer awareness is also very important. In conclusion, I believe every stakeholders, from regulator to law enforcement agency to banks and even customers, need to collaborate effectively. Robust collaboration among the stakeholders, leverage of technology, and continuous vigil may help to prevent frauds and to detect frauds early and initiate remedial action. Thank you very much.
Thank you, sir. Our next speaker is Shri Atul Kumar Goyal. Shri Goyal is having 3 decades of rich experience as professional banker. Currently, he is chairman of Indian Banks Association and serving as MD and CEO of Punjab National Bank since February 2022. Shri Goyal served as MD and CEO of UCO Bank for more than 3 years before being appointed as MD and CEO of PNB. Prior to his elevation as MD and CEO, he served as the Executive Director in Union Bank of India for more than 2 years. Shri Goyal joined erstwhile Allahabad Bank in 1992 as a chartered accountant. He has handled key areas covering vast spectrum of banking operations, including large corporate, treasury management, risk management, financial planning, and investor relations, apart from support service, business process transformation, compliance, etc. He was also Chief Financial Officer in Allahabad Bank. He is a member of Governing Council and the Chairman of Executive Committee of Indian Institute of Banking and Finance. He is also a director in Oriental Insurance Company Limited, PNB MetLife India Insurance Company Limited, PNB Housing Finance Limited, and PNB International Limited. May I now request Shri Goyal to kindly address the session.
Thank you very much, Anurag ji. Good afternoon to everybody, distinguished panelists on the dais and the August gathering. It is really my privilege that I have got this opportunity, and I'm thankful to Director CBI and their team also for inviting me and to express my view to this August gathering. The topic, everybody knows, the Smith of the banking fraud in India. I am the 4th last speaker. And the problem for the last speaker, whatever I was supposed to tell, already everywhere covered by my previous speaker. Even I will try to make my session interesting. Time is also not permitting. 4:30 was the time. The fraud in the bank is a very challenging as well as the concern for the banking industry. Everybody is aware, and Mr. Sinha has already given the data also. I am not going to data because there was a rising trend in the banking fraud in recent past year, and I am correcting my statement because when I am talking the last few years, basically already you have seen the data from the 1922 till date last 3 years. There was a decline in the fraud, but if you see the data from the 16-17, the data was 23,928, which has increased to 1920, 1,85,468. The fraud not only cause for the financial loss, but is erode the public trust in the banking industries. What was the reason for this increase in the fraud from the 17 from the figure of this 23,000 to 185 in the 1920, and after that it has come down. The reason of this increase in the fraud, because from the DFS on the 13th May 2015, there was a circular issued for the timely detection of the fund based on the RBI circular which they have issued on the 7th May 2015. And in this direction, the DF has given every NP account more than 50 crore rupees to be seen from the fraud angle. This was the reason, so I am just telling. And not only this, whatever this fraud, this have been reported in the 16, 17, 17, 18 in the coming years, more than 90% fraud occurred in the previous financial years. And as far as tactics is concerned, already has been discussed in the by Sinha also, but I may tell you lot of initiatives to prevent the fraud has been taken by the regulator as well as the government of India. Because there is a 2 type of the fraud in the banking industry. First is the fraud to the borrower account, and Gyan Setu has also told in deliberation that risk management system of the bank has to be improved to reduce the fraud in the as far as borrower fraud is concerned. already has been discussed. The reason of the borrowing fraud is this diversion of the fund, then siphoning of the fund, and other on account of the wrong financial data, wrong collateral value, or wrong document also. So I will give you some idea also, because lot of, as I told you, lot of initiative. The reason of the siphoning or the diversion of the fund on the banking fraud was on account of two reasons. First, they were opening the current account. The other lender who are not giving the finance to them. So this has been already taken care by the regulator in 2020. There is a detailed circular for opening of the current account, and as on date, any customer who is availing more than 5 crore rupees, they are not allowed to open the current account. So this step of the regulator has minimized the fraud on account of the diversion. The second, when we are talking about the divergence, so this ASM framework, Agency for the Special Monitoring, which is the action point of the EASE agenda, which was implemented from the 2021, has taken care any account more than 250 crore rupees, where bank are required to appoint the ASM, and every transaction which the borrower has to make the payment to their supplier, etc. also, it is being taken care. So two things, this current account as well as the ASM has helped this reduction in the fraud. The other non-borrowing fraud as digital, electronics, and the on account of the, Gyan Setu has also told you, on account of the checks. So checks there may be three types of the fraud. Checks may be counterfeit, check may be altered, and check may be stolen. And a lot of steps also been taken for this. Positive pay, which was introduced by on the regulator, 2020 circular is there. Now, customer is more than, if they are issuing check more than 50,000 rupees, they can send SMS, they can send through using the internet banking, etc., where they are required to give the detail of their issued date of the checks, beneficiary, and at the time of the payment this check, if there is a mismatch in the detail which the customer has provided, the check will not be honored. So this will reduce the checks fraud also. And one more important thing, mostly all the banks has also done regarding this alphanumeric number. This alphanumerical number on the checks is a very unique number, and this, when the checkbook is printed, this check, they are giving alphanumeric number in each and every checkbook which is stored in the CBS. The moment check is coming for the payment, this alphanumeric number on the check should be matched in system. So there can very least possibility of the fraud. And the checks has been taken care on account of the guide and risk management system. And as far as preventive vigilance is concerned, this everybody on the basis of the Santhana Committee, which was introduced in 1964, a lot of initiative of the preventive vigilance has been taken by the banks also. This enterprises fraud risk management system. I will give some data of my bank also, because it is related to the risk management. Gyan Setu has also told. This enterprise fraud risk management system identify the automatic suspicious fraud pattern. And not only they are detecting, they are declining the transaction. I will give an example. Suppose somebody is using their ATM and they have withdrawn the money in the Delhi ATM. Suppose after 5 minutes or 10 minutes, the same credit card is being used from the Bangalore. So this will give the signal to this fraud risk management system, and they will decline the transaction. And I am happy to share in 2021, 5,02,885, this number of alert has been generated in our bank for an amount of 4,299 in 21-22. This number has increased to 34,054 lakh and 34 lakh 54,000 for an amount of 22,400 84 crore rupees declined. So this amount has been saved by using this system. This is based on the 96 scenario in the preventive, 62 scenario on the monitoring side. And another is the control and supervision of site survey and the surveillance system, which is also has been implemented in our bank and the other bank also, which is based on the 63 scenario. As Gyan Sahab has also told regarding this EWS, RBI has given 42 indicators, and most of the bank, all the bank is using more than 100, 110. In our bank, 127 scenarios we are using for this. And because preventive is very, very, very important. Similarly, in the somebody is withdrawing in the money in the ATM from the night. Now the OTP has also been mandatory from the transaction which is being occurring from the ATM from 10 p.m. to 8 a.m. So customer is also required additional OTP in addition to the PIN they are generating. And monitoring of the internal account, positive pays, and most important is the, my earlier speaker has told, there is a need of creating the awareness. If really we want to reduce the number of the frauds, we have to create the awareness in the customer as well as the banking staff. There was a question about the capability building also. That is also very mandatory in the current scenario. And not only the customer as well as our staff has to be trained. So I think time is not permitting me, so I will pause here, and this I will tell you, fraud can be prevented by using the preventive measures available in the bank. The number of the fraud which was done in the last year, and the number is reducing every year. So on account of some of the preventive measures which I have told, like positive pay and the numeric and the FRM system, this will further reduce. With this word, thank you very much.
Thank you, Mr. Goel. We have already short time, but despite that, we can have few questions, very short questions. So now audience, anybody from audience can raise, yeah, please. Please introduce yourself and then Mike.
We have mics here.
Mike, लिखा हो इधर से आ जाओ ना बाहर से
Hello. Good evening, sir. May I?
just a minute, please. Okay, next you will. Please.
Sir, I'm Ajay Kanodia, Additional Secretary in Central Vigilance Commission. And we all know modus operandi of the whatever bank frauds being adopted by the fraudster. Currently, sir, we are declaring frauds based on the forensic audit reports. But recently, Honorable Supreme Court of India has given a judgment that bank cannot declare any bank loan accounts of the borrower unilaterally. And the borrower must be given an opportunity to explain his version. Now my question is, how it is going to impact the process of declaration of fraud by the banks? Thank you, sir.
Thank you very much. Am I audible, na? Yeah. देखिए, as a part of the banking system, we fully understand the verdict of the Supreme Court, which is based on the natural justice and which is the right of the every citizen. And Supreme Court has also noted the criminal offense as well as the civil consequence of if we are declaring any account of the fraud. But I may tell you what is the existing system as on date. Only I will divide in three categories. First is the EWS. So there is a very well system as provided by the Reserve Bank of India, our regulator, on the 1st of the July 2016 circular, which have been updated on the 3rd of the September 2017. Where first step is the EWS, early warning singular. This is the already system in place in each and every bank. It is a part of their credit monitoring. If their signal is coming, so they are closing this out of their own, or if there is not information available, they are asking the information from the customer also. And if they are thinking that there is a further need of the scrutiny also, so there is another step to classify the account as a RFA. So when account is being classified RFA on account of the additional information has to be obtained from the customer. And if account is under the consortium, the bank who is declaring the FA, they have to inform to the consortium leader, or if it is in the multiple banking, they have to inform the person who is the lender who has the highest. Within 15 days, they have to call the JLM, and after 15 days, if everybody has agreed, everybody has to declare the account as a RFA, and within 6 months, after declaring of the RFA, the account has to do for the forensic audit, etc. And based on the forensic audit, account will be declared for. So my saying was this, ki at the time of the EWS, at the time of the declaring the account RFA, and at the time of the forensic audit, the borrower is very much aware. Borrower is very much aware. They are, from the day one, they are aware ki they have done the transaction. Even in the forensic audit has to be done with the information to be provided by the customer. So they are very much aware. Only thing is that it is informal system is there. Whatever the decision of the Supreme Court, I think there is a need to make the formal system by issuing the letter or the order. So this is my view. Otherwise, system was very much available. This I want to say, and borrower was available, but informal system was available, which have to make the formal. And I will request Gyan Sahab ki we are waiting for the order. What system we have to make changes in the, which is the, there is a very set regulation available, very detailed circular of the 2016 is available. So I think there will be a need to certain changes in the circular to comply the order of the Supreme Court. Sir, you may add something you want to add.
Thank you, Mr. Goyal. My request to our panelists is kindly be brief in the response, because we have already overshot time.
Yeah, good evening.
Mr. Rath.
My name is Ajit Rath from SBI. I'm CBO. Sir, actually, after the NPA, we normally put the account through forensic audit, and based on the kind of findings, account is declared as a fraud, then we file complaint with CBI. So forensic audits mostly kind of point to corporate misgovernance, as even Dr. Vivek also was telling, and also corporate misaccounting, related party transactions. So those are the actually major factor why account is declared as a fraud. Also as part of the kind of NPA, we do staff accountability study. There staff, of course, we find lapses. It could be mere lapses or gross negligence. So when we file the complaint with CBI, so always the fear continues in the mind of the kind of staff that what will happen to me, despite having the protection under basically our sanction prosecution, previous sanction under 17A or 19C. But the fear continues. So that could be a kind of risk aversion to the credit. So we like CBI being the kind of investigating agency. So I think any suggestion, sir, it is specific to Praveen Sinha, sir. How do you obviate this fear from the employees, sir?
Thank you, Mr. Rath, for raising a very pertinent question. In fact, wherever we go, often from the bank side, the bankers have been expressing their anxiety on this particular question. In fact, to be very honest, we in the CBI, and I'm sure as well in the government, are very conscious of the fact that the morale of the banker is the topmost priority. And the banker is primarily in the business of banking. He is not in the business of vigilance or anti-corruption. So we do not want to become an impediment or to bring down his morale. So as you are aware, number one, in fact, today the banker amongst all public servant has got the maximum amount of protection. Before a case is registered against any bank employee, the level of protection, number one, is that under the Prevention of Corruption Act, under Section 17A, a prior approval has to be taken from the concerned competent authority in the bank. This, as I said earlier, has now been extended to all the private sector bank employees as well. So that is the first. Second is, in the CBI, we have now made a centralized banking complaint cell. So the cases are now registered centrally at the banking fraud zone only. It is not done decentralized at different branches, and from here only it is distributed everywhere. So that is the second thing. So cases, number three, in general, we have issued an order that we will register only cases which are handed over to us by the banks. So on our own now, for the last 3 years, virtually no case has been registered. As it is, hundreds of complaints keep on coming to us, they are pending with us. So that is another special instruction issued within the CBI. Thereafter, in fact, now Dr. Bhasin sir, our former Vigilance Commissioner, is here, and he is the head of the ABBFF. So this is a special protection given to the bankers, that earlier it was all GM level above and 50 crore and above any case the bank first sent to the ABBFF. Now it is in recent past changed. So every level and every case is sent there. And I keep on going through the recommendations. Now in most of the cases, they have recommended that you take departmental action against the bankers. The ABBFF goes through it thoroughly. So a lot of cases it is suggested that the banker is not criminally liable for it. Thereafter, as you are aware, within the CBI, the investigation is not done by one individual or some inspector or IO or anybody. They every investigation, there is IO, then is a law officer, and then there is a hierarchy. So sometimes it is even 12, 13 levels which take a decision. So the final call is taken after a lot of the different people giving their minds, and after a lot of due diligence, I would use your term. And finally, before any charge sheet is filed, before prosecuting any person, under the Prevention of Corruption Act, under Section 19, the sanction for prosecution has to be taken from the concerned sanctioning authority. And in fact, the sanctioning authority has the ultimate authority. So even if the CBI requests for a sanction, even if the CVC agrees with the CBI, or even if there is a difference of opinion, the ministry also agrees, then also the final authority lies with the sanctioning authority. So there are different levels of protection which are given to the bankers. And to dispel the common, I will not say common, but notion sometimes expressed, that bankers are scared of CBI action or being sent to jail and others, the figures totally belie it. In the last few years, in fact, more than 600 to 700 cases would have been registered. The number of persons who have been arrested, cumulatively, bank officers, I mean to say, hardly go in double figures. Some years it is 0, some years 2, 3, and they are people whom the bank themselves, like Mr. Gokulnath Shetty of the Punjab National Bank in the Nirav Modi case, the person who has actually committed a crime which the bank himself is telling. Otherwise, not a single person is arrested, and we are very conscious of the fact that the morale of the banker has to be high for the economy and the nation to progress. I hope I have been able to answer your question. Thank you very much.
Sir, this is YK Jetwa.
Shall I speak?
Please, sir. Mic.
I'll take only 2 minutes. Sanskrit is supposed to be a very precise language. You'll permit me to start with a Sanskrit shlok. Ashtadash Puraneshu Vyasasya Vashnadvayam Paropkaraha Punyaya Papaya Parpirnam. I'll not translate, I'll not explain. What it says is, 18 Puranon mein sirf do hi baatein kahi gayi hain. I spent lifetime doing all this. I'm a private citizen now. So when you peel off an onion, lot of tears come. So I'll tell you three simple methods of bringing smile on your faces and faces of the economy. There are certain systemic changes which have to be brought about in the banking sector. I'm glad a very senior executive of the Reserve Bank of India is also here. One, retail banking. Small frauds, they just don't matter. Ignore them. Because cost of investigation is more than the amount involved in the fraud. Forget about it. The real problem is in the corporate banking. And the figures that Sinha has shown, that proves the point. So, one of the reasons that I found responsible for this large-scale fraud is that most of the banks have created their verticals at the headquarters. And the bank manager, through whom the money goes out, he's just not consulted. He's like SHO of a police station. DG passing an order without consulting the SHO, that will be absurd, that will be bizarre. So this is what is happening in the banking sector, particularly corporate banking. So therefore something has to be done about it. Second, one-time settlement. I have a lot of stories to narrate, but we are getting late. You see, 350 crore fraud being settled for 50 crores. This happened when I was handling the cell which Mr. Sinha is handling now. I spoke to Mr. Rai, who was my batchmate, who was banking secretary at that time. मैंने कहा ये क्या हो रहा है? कहते हैं भाई बैंक वाले बड़े पावरफुल हैं, करने तो जो कुछ करते हैं. So another, I was consulted by a bank, a very big corporate, multinational business house. For 14,000 crores, they wanted to settle for 2,000 crores, and they wanted my advice. I said, you have not consulted me. If it is 40%, 45%, 50%, you can do it. But the question is, what's worthwhile doing it? I said, CBI आएगी, सारे कागज उठा के ले जाएगी, आपका सारा करियर चौपट हो जाएगा. So इसलिए अगर करना है तो आप फाइल में कहीं मत लिखना है, मेरे से आपने डिस्कस किया है. So one-time settlement is a major problem. And third, systemic, is consortium system. ये वैसा ही है, एक बंदर दूसरे की पूंछ पकड़ के चलता है, उसकी पूंछ दूसरा बंदर पकड़ लेता है और चलते जाते हैं. ड्यू डिलीजेंस इसलिए नहीं है. मैंने 20 साल CBI में बिताए, and this is I retired 51 years ago, joined 51 years ago. I find ड्यू डिलीजेंस कौन करेगा? अंधेधुन चल रहे हैं. होली काउज है, जिसमें जैन साहब मुझे माफ करें, उसमें RBI भी है. I am free citizen now, I can speak. And उसमें स्टेट बैंक ऑफ इंडिया भी है. 30,000 करोड़ लोन दे दिया. छोटे छोटे बैंक है, वो कहते हैं 5,000 करोड़ हमारा भी डाल दो, हम भी कुछ कमा लेंगे. So ये तीन चीजें हैं. If you can bring about systemic changes in three things, your corporate frauds or losses, and I know that all NPAs are not frauds. And very rightly, Supreme Court has passed the judgment that you hear the party and all that. But assuming it's a fraud, if you bring about these three changes, your fraud numbers and the volume will come down to 20%. Thank you.
Thank you, sir. We had very fruitful discussion and deliberations today. The key is due diligence. If proper due diligence is exercised by the bankers, then definitely the frauds can be prevented to a large extent. Of course, the regulators and investigating agencies need to differentiate between the mala fide and bona fide acts of the bankers. We will be compiling the suggestions and the points raised during this session, and key suggestions will be examined and further necessary action will be taken at CBI level. And the relevant suggestions will also be forwarded to the concerned ministry in government and also to all other stakeholders, including the regulators. Preventive vigilance is a very important function of CBI, and we have already published an almanac on bank frauds in which we have given 53 case studies, major loopholes observed, and suggestions to overcome those loopholes have also been given. I am hopeful that this almanac will be useful for the bankers as well as our investigating officers. On behalf of Director CBI, I extend my deep gratitude to our distinguished panelists who have taken time off their busy schedule to address the session and participate in the deliberations. They have provided very deep insights into the topic, besides very valuable inputs and suggestions for prevention and detection of frauds. I also thank the officers from various organizations for participating in this session and to be part of this deliberation. Their presence has enriched the session. Once again, I thank you all. I request Director CBI, sir, to kindly present mementos to our panelists as mark of our gratitude. On behalf of Director CBI, I now invite all of you for a cup of tea. There will be a tea break of 15 minutes. After that, please assemble by 5:40 for the next session.
जब इतना खोजने के बाद हमें
We did.
अपना घर बनाने का सपना कहीं सपना ना रह जाए, इसलिए हम दे रहे हैं होम लोन्स विदाउट एनी इंटरेस्ट।
सर वो आप अपना वो मोमेंटो कलेक्ट कर लीजिए, नहीं तो यहाँ से गड़बड़ हो जाएगा। हाँ सर, तो यहाँ आप आ रहे हैं सर, क्योंकि आप आएंगे तभी मैं यहाँ से जाऊँगी।
पाप नहीं करेंगे भैया। संजय गुप्ता